Okay, everybody, it is me and you. I love this part. I love when we are together and we're gonna have a good time. We always have a good time, don't we? I mean, let's be honest with each other, right? We laugh, we cry, I don't know, do cartwheels around the office. Anyway, look, so here's the story. This is my post-market wrap-up on this Friday. We got through another week. Friday, May 20th, 2022. What a day. You want to talk about a freak show? Well, here you go. It's another segment of a never-ending, complete, total, absolute freak show. Oh, yeah, we have monkeypox now. Monkeypox! Make it up. Make it up. Another fear tactic. Monkeypox. Go look up monkeypox. Yes, you're going to get monkeypox. You're going to start scratching all over the place. And you're going to get little blisters and you're going to crust over. And you're going to have all kinds of fun. I mean, look, wow. I mean, it just didn't stop. So let's see. What do we got? I wrote this down this morning. Okay, you ready? This is what this market is fighting against, or everything. We, the people. Recession fears, an economic collapse for which we are clearly in. Food inflation, food shortages, which seem to be starting. Let's see. Oh, yes, we have the baby formula crisis. Let's not forget that. Obviously, skyrocketing cost of living, energy. Did I say that already? What else? New COVID resurgence, and now we have monkeypox. Monkeypox. Make it up. All right, look, let's talk about this market today. What a freaking day. Fractional, and I'm talking literally fractional gains today for the Dow Jones Industrial Average and, of course, the S&P 500, which did earlier today fall below our critical level, which would bring us to an actual bear market with regard to the S&P 500. But we climbed out of that. We're still not officially there. You know, look, I get it, people. It sure as hell feels like a bear market. And it is with regard to the NASDAQ, not so for the S&P 500 nor the Dow. And people are really, look, people just they're not used to it. I understand that. If you've been in the market for years and you've been taking advantage of this bull run, no one can deny. I got some interesting nicknames here that I have been a raging bull for years. And frankly, me and my lions have made stupid amounts of money. But once in a while, you got to give some back. That's the way it is. You know, it's not always a free-for-all. This has been a free-for-all. I mean, let's be honest with each other. It's been unbelievable. Okay, the gift that kept on giving, this stock market, now we give back, according to the S&P, about 19%. Wow, what a shocker here. But anyway, look, I understand that some people, maybe who got into the market relatively recently, they're not too happy. And I got that. But look, you know how you learn about this market? By being in it, number one. Number two, by taking it in. When I first got into this business years and years ago, I've admitted this. I lost more money than I shared to you. Won't even talk about it. I didn't want to think about it. Okay, made it all back. Obviously, it took a very long time. But in the beginning, like everybody else who gets into this market, you learn it the hard way. All right, and sometimes it's about timing as well. And look. If you are a subscriber to my newsletter, which I sincerely hope you are, I wrote several pieces today. One, outlined several things that you can do right now. And I've been talking about this for weeks. If you are so inclined, if you have that much on the line, money you can't afford to lose, which you should never play with. I don't know another way to put it. I have to repeat things over and over and over and over again. If you're in this market with a single penny that you cannot afford to lose, you're in the wrong. You should not have your cash here. Okay? You should find something else to do with it. So like I've been explaining to people, based upon a lot of things, it's not out of the realm of things that you can do to take up a cash position. I mean, being in cash right now or anytime, it just sucks in my opinion. Me, I don't like to keep cash around. I like to keep investing it in things, in assets, whether it's a stock, a derivative, a piece of artwork, a musical instrument, a classic car, whatever, some cryptocurrency, stuff like that. Okay. But again, you need to evaluate who you are and what your time horizon is. Again, look, investing, when you invest in something, generally it takes time for things to play out. That's the rule. Okay, well, time horizon is huge here in this market, especially with whatever's going on here, right? It certainly, like I said, it certainly feels like a bear market. It is in the NASDAQ. You're getting these, every time the stock market makes a gain, you see it get sold off. I mean, today, at one point, the Dow Jones Industrial Average was up like almost 300 points. At the low, we were down over 600 points with regard to the Dow. We finished with a gain, fractional, but a gain nonetheless. Same thing with regard to the S&P 500. We went into bear market territory, definition of 20% off of the high. We came out of that. Doesn't mean it's over. Look, you know when this is going to be over? Stop guessing. Stop guessing. I already told you, and I've said it, but maybe you didn't hear it. Let me say it again. When the 10-year yield gets above 3%, what you're seeing now is a classic fear trade. Fear of monkeypox and COVID and recessions and depressions and surging food prices, surging energy prices. I mean, what else do you want? A war that is not going to stop. It's going to go on and on and on and on with hundreds of billions and probably in the trillions getting thrown at it. That mechanism is to allow central banks to continue to inflate. And they will continue to inflate regardless of quantitative tightening rumors or whatever else is going on. I showed you that money supply chart this morning. It's ballooning. There's no end in sight here. Massively inflationary. And don't take my word for it. X.J. Powell himself. Because inflation is largely a monetary policy issue. Don't believe Greg Mannarino. Duh. People make any of this stuff up. Make it any of it up. Anyway, going back to the market, and I was saying, we are down 19% with regard to the S&P 500 after years of gains. Years and years of gains. Okay. Is it time to throw in the towel? Should you be getting out of the market? That's entirely up to you. Me, what will Greg Mannarino do? Well, again, if you subscribe to my free newsletter, link in the description of the video. How about if I sing a song? Let's try that. There is a link in the description of this video. Maybe you should click on it. Doesn't rhyme. Shitty song. What can I tell you? But it's down there. All right. Read what I said I would do, but I'll tell you. Me personally, I own a bunch of companies. You all know that. Most of these, except for one, is a large cap company that's paying me a nice dividend. Devon is the only one that's not large cap, it's mid cap. All right. And that pays a fat dividend. I want that dividend. I want these companies to pay me to own their stock while I look for opportunity to own shares of these companies for a cheaper price. If I liked company XYZ at X and it drops to Y and I still like that company, I'm going to be very happy to buy it lower. Honestly, I do not see, maybe I'm blind and I think a lot of you believe I am, a meltdown here. I see a market in S&P 500 that isn't even in bear market territory yet. I've been in this market for a very, very long time. And I've taken advantage of it along with my Lions for a very, very long time. So this doesn't faze me. I understand those of you that are maybe new here. It's phasing you, but I still believe, beyond any doubt, this market this S&P 500, which is the broader market, could absolutely still hit new record highs by the end of this year. And let me tell you something else. If you don't believe for a nanosecond that Wall Street's going to get a bailout again if it needs it, courtesy of you, they're going to get it all right. And you're going to pay for it. So look, these are the other things that you got to factor in. You don't think this is a free market, do you? No, it's a managed market. This market has been managed since 2008, where it really got going, and now it's completely been taken over by the Federal Reserve. Central banks around the world are all managing their respective markets here. And again, my whole case that I have built upon a market crash is going to be that it's going to begin in the debt market, because that's the bubble that is inflating everything. Okay, the debt market hyper bubble. There's nothing like it. There's never been anything like it, and it's going to continue to be inflated. Don't for a nanosecond think it's not. Until the moment of implosion. And that moment of implosion is going to be that moment in time that's going to change everything. And I'm not talking about a slow burn over several months. I'm talking about a rapid collapse in a matter of days. In a matter of days, you are going to see the stock market, the S&P 500, get shredded. Okay, that's another reason why we know we're not in a crash. When you're in a crash, everybody runs for the door at the same time, and people mark down whatever asset they have. Let's say they own ABC stock. They want to sell it at X price. They're putting in a limit order to get rid of it. Oh, guess what? It doesn't trigger, so they lower it. They lower it. They lower it, and then all of a sudden they're willing to take anything for it. That's a crash. For those of you that maybe don't know, and I think there's a lot of you who don't know, unfortunately. Look back on don't listen to me. Look back on history. Look at every single crash that has occurred. Doesn't act like this. All right? This is not a crash. This is a market that has been going straight up for years in some kind of a correction phase. That's it. That's all this is. And if we fall into bear market territory with regard to the S&P 500 officially, which we did today, but we came out, if we go back, what does it mean? What are you going to do? Think about this. Okay. Investment banks, hedge funds here, they like to keep money working one way or the other. We understand that now some of these institutions are starting to take up short positions against the S&P 500. To me, could possibly be very bullish here, honestly. You have rates that are continuing to be suppressed. You have this massive fear trade going on right now. 10-year yield, 2.78. We were at 3.14 just a couple of weeks ago. That is an enormous amount of cash fleeing the stock market, making its way into the safety or perceived retarded safety of the debt market, which is the biggest hyperbubble the world has ever seen. And if you are buying debt here in the form of a treasury, you're getting robbed blind if you weigh that against the actual rate of inflation or the rate of inflation they're telling you that we have. We got 8.5%, 9%. You want to hold a unit of debt like a 10-year treasury that's paying less than 3%? Really? You're asking to get robbed blind. Make that up too, like monkeypox. Make that up. Make any of this shit up. Anyway, look, I was writing some other stuff down today. I do think a couple of things are going to occur. Obviously, we are in some kind of energy crisis. The cost of energy is getting really, really out of control. We all pay bills. We all buy gas. And I think that is going to manifest itself a lot worse moving forward. So I want you to be ready for that. Also, I think shortages are going to become very real. So I think you want to start hoarding non-perishables. And, look, this is a play on the people. Again, COVID now, monkeypox, wars, everything else that's going on right now seems biblical, doesn't it? And anyway, and like I've been telling you, the meltdown in the stock market, in the debt market, which is going to destroy the stock market, what this really comes down to with regard to this entire thing is a resource problem. And I've said this and I've never wavered for years since day one. We're starting to see that manifest itself. When it gets to an extreme, when the debt market implodes and we're unable to continually pull cash out of the future, they will create other reasons to throw cash at it. In other words, expanding wars. More than likely, and it's very possible that we could see a global war. And what would that do? Understanding the mechanism behind this, I've explained to you. that a massive resource problem is going to manifest itself. This is nothing what we're seeing right now. And that's another thing you have to think about. In a full-on market crash scenario, which is going to happen, this is not a crash right now, you're going to watch the stores get cleaned out in a matter of hours, days. There'll be nothing. There'll be nothing there. And the stores won't be able to refill themselves. They will not be able to restock in an implosion in the debt market. Everything is going to freeze. Everything is going to lock up. This, what we're seeing now, would make a real implosion in the debt market / stock market crash seem like happy days are here again. This is nothing, absolutely nothing. But people are getting extremely bent out of shape. And these are more than likely not people who are in the market, who understand how it works, the dynamics behind it, what's going on. Or people playing with money they can't afford to lose. People, if you're one of those kinds, get out, close positions. I don't know. Don't stay in cash. Do something with it. I don't know. Pay your bills. If you're in debt, get out of it. I don't know what to tell you. But anyway, just think about the things that I cover here every day with you, for you. I want you to come away from these videos with an understanding of what's really going on, not the hype, not post by trolls, not the distractions, the deflections, the misinformation, the propaganda, but what's really going on. And all you got to do is sit back and look at the situation. It's very dire. Like I said, our economy, it's been over for years. Years and years and years. It's been nothing but easy money that's kept the stock market propped up, period, the end. And in the face of everything that the market is facing today, the fact that the S&P 500 is only down 19% and not 50, I think is is a testament to what's really going on. It's a fake market. It's gonna be that way because it's now managed. There is no real market anymore. And like I said before, if you don't think for a nanosecond that you are not going to once again be forced to bail out Wall Street, oh, you will. Bail in, bail out, whatever. You're paying for it. Just remember that. And this is also a mechanism to suck people dry. Whoever's left of the middle class, you're going away. You're going away. Look at yourself in the mirror and say bye. Like that target on your face that I have told you has been there for years. I don't even know how many years. I've said that at least from 5 years ago, maybe longer. It's still there. It's still there. And you need to, honestly figure out a way to keep your head above water. And that's not by borrowing more. What's going on now? The phenomenon that you and I knew would occur. Previous members of the middle class who believe they still are continue to borrow beyond their eyeballs, burying themselves in more debt. Household debt, consumer debt, is off the Richter scale. It keeps getting worse. And these people are guaranteeing that they're done. And they're going to become, look, that's also part of the mechanism here. They want slaves to the system. They want you a slave to the system so you can become dependent on government. Don't you see? The whole concept of a nation that can govern themselves, it's over. It's over. This whole thing was a beautiful thing while it lasted. Some very smart people thought of that and tried to put us all on the right path, but we let it go. And now we are seeing the ramifications of it. Can we turn it around? I don't think so. There's not enough. And everything right now we're seeing, again, has been planned out from decades ago. And you can expect it to get much worse. So just think about these things. I talk about here, what I put out in my newsletter, and think about what it means for you, your family. People, I've told all of you for years that we each other are our own greatest resource. It's really the truth. And we gotta come together. We gotta realize what's happening, what they're trying to do. I mean, monkeypox, you think this is the last one? No, it's not the last one. Whatever they gotta do, they will throw at you. So how many times have I told you? Be ready for anything. Ready for anything. Don't panic. Don't rattle. Because the moment, whether it's with the market or anything else, because the moment you do that, you're done. And they got you by the throat. And that's what they're trying to do. They're trying to rattle you. They're trying to scare you. They want you paralyzed with fear. But you're not going to allow that to happen. At least I hope not. All right, look, long video. It's Friday. I have an incredibly busy weekend. I'm going to get a Marcus a look ahead out for you. It might actually be tomorrow night instead of in the morning on Sunday, but we'll see. I'll get it out. People, bring it in. Ready? Let's do this. Okay, this is it. What I'm about to do. It's the most important thing. Love each other. Care about each other. Be charitable. All right? Please comment here about the things I spoke about. Is anything a surprise to you? A shock here? Monkeypox. I can't get over that. All right, look, I'm out of here. Love you a lot. I'll see you over the weekend, and we'll put more of this together. And, I'll definitely see you next week. And it's going to be fun. I love this freak show. I don't know about you, but I just do. Maybe there's something wrong with me. I think that's pretty evident. I'm out of here. See ya.